Policymakers are only half-hearted at containing property prices here in Singapore. Let's talk about this today. Guys, many of you may have seen this article on Edge Prop. It says Singapore may need more aggressive property cooling measures by Barclays. And for those people that don't know what is actually a cooling measure, previously I've done this video that talks about this cooling measures, why there are cooling measures, what happened after cooling measures, so that if you are new to it, you can get some information here. And so how this video is going to be done is, number one, I'm going through the TLDR version of this article. Next, my comments on this article using some facts and figures. So last but not least, I'll be sharing with you what you should be doing as a buyer and seller if a cooling measure really happens. So if you enjoy watching content like this that talks about buying properties, how to create more wealth using asset, do me a favor by liking this video because it just motivates me to do more of these. Thank you so much. So Singapore authorities may have to add more aggressive real estate curbs down the road if they fail to tackle home buying frenzy by early next year. A recent resurgence in the private market driven by Blockbuster November has raised the likelihood of a revival in property prices. And take note, it says a revival, which I'll be talking about it later, and a repeat of 2017 to 2019 when buyers struck off cooling measures. A lack of response may well be interpreted as confirmation that policymakers are only half-hearted trying to contain property prices by analysts Brian Tan and Audrey Ong. And it shows a graph over here that shows the property price index against the property cooling measures, which we will talk about this later using some data. More than 2,400 new private homes were sold last month. According to preliminary data from URA, authorities putting sales on pace for their best month in more than a decade. Singapore Central Bank said last week that easing of domestic lending rates have boosted sentiments in the private property market, will remain vigilant to market developments and in an annual financial stability review. So the rest, nothing much. It's just the government saying that we actually came out with cooling measure. In fact, 3 rounds of cooling measures in just 3 years to try to cool the property market. Most recently is to actually curb off a foreigner buyer by increasing the additional buyer stamp duty for foreigners to 60%. Not drastic enough, man. So real estate investors are nonetheless likely to retroactively interpret the announcements of the property tax rebate as a signal that government is easing on the brakes. And in this road, some market players may choose to see what they want to see in order to master as many arguments as they can to further fuel the frenzy if investor sentiments improve. This article is not that long, so I was able to actually just recite through everything because I feel like the way they put it is in a very interesting way. Why? Because it just sometimes make me feel like, hey, these people really want the property price to go down. So that's all for the article. It's a short one, so I managed to finish everything. So now I want to give you my comments. So first thing that I want to comment on is definitely the word they use over here, revival. Some of you, if you have been watching the market, or you would have noticed that the prices actually taper down a bit. So this is one of the chart that we have over here. You can see that ever since 2022 year end, saying why I need to pinpoint the word revival, because if you read other articles, it actually said that the property prices rebounded. And why are they saying so? If you look at the chart over here, from year 2023 quarter 2 to year 2024 quarter 2, you actually saw overall private home sales prices actually go down for a little bit by about 7.8%. So there was already a slight correction in terms of the overall private property market. And why is that so? It was largely fueled by higher interest rates and also cooling measures by the government trying to curb the foreigners from buying private property. And was it effective? It was, because you saw the index coming down for a bit. Next part I would like to highlight would be the part where they say that 2017 there's a repeat when buyers struck off, the way it struck off cooling measures. I will personally think, me as an agent already at that point in time, I was also buying a property. I was there at the show flat at Riverfront Residences that time. Did we struck off the cooling measures? Actually no, because today if you look back at the prices over there in Q3 2018 when they implemented the cooling measures with 5% more down payment and also increase in additional buyer stamp duty for second property buyers from, if I'm not wrong, 7% to 12% back then. Did the prices go down? No, but you see that the prices actually stabilized. So in 2018 when they came out with the additional buyer stamp duty, increasing the ABSD, did the prices go down? No. But in fact, you saw that the prices maintained in Q4 2018 and Q1 2019 before the prices continued to push up again. They're not wrong to say that people struck things off, but being in the market, buying a property at that point in time when the measures were implemented, did the market go down? No. Do you know why? Because cooling measures has never been implemented to cause price to go down. It's just to control and also regulate the growth of property prices. It's a cooling measure. Cool off the market doesn't mean to crash the market. It's a cooling measure, not a crashing measure. But why are people hoping that the market will crash when there's a cooling measure, right? If you watch my previous video, the release by MAS is to say that make sure cooling measures are implemented to ensure that our property prices grows in line with our economic fundamentals such as income. So when the income GDP goes up, the prices of property should be going up as well. All in all, on this comment, people shrug off cooling measure. No, the government is just happy that even with lower loan to value means to say you need to pay down more and the property prices are still growing. Is it a good indicator? Yes, it means that the Singaporeans are prudent enough to be able to pay more down payment to buy the private property. So signaling that prices should be okay to go up a bit more since people can afford. My last comment about this article, it says 2025 property tax rebate announced recently for homes. Nonetheless, like the real estate investors are likely to retroactively interpret that announcement as a signal that government is easing on the brakes. It will just make me wonder why we are saying this. Why? Because I went to go and calculate today, if let's say you are using property tax as a private property, you're only getting like 15% rebate of your property tax this year, and it's at 15% capped at $1,000. You'll be thinking, oh, we're giving out $1,000 rebate. But actually, you went to go and calculate today when you're talking about owner-occupied tax rates in Singapore 2024. First $8,000 is at 0%. Next 22,000 is at 4%, next 10k is at 6%. So let's say you are using the most entry level condominium using a 30k annual value. We are talking about a 4% means to say it's $1,200. 15% on $1,200 is only $180. I really don't see any reason why people for $100 to $200 with thinking that the government is trying to stir the market or to ease on the brakes. I would think that this is more likely because, 2025, what's going to happen? There's a major thing that's going to happen that will reshuffle the policy makers and all these things. It's a major campaign for the government. Let me know what you think in the comments, but basically it is to actually make people happy by easing the cost of living. I wouldn't really think that it will actually make investors think the price will want to go up. Until now, right, these comments are not to say that this article is wrong. I'm just trying to tell you what are the real indicators that I see, which will be in the next part in what you should be doing as a buyer and seller. So if you are still watching until now and have not been subscribing to the channel, can you please subscribe now? Because I've been posting regular content like this, and by subscribing, it ensures that you will not miss out on any important information about the property market. Thank you in advance. Now, coming to what you should be doing as a buyer and seller, I will fall back to my 3 golden principles, which is number 1, save up and start investing as early as you can. Number 2, constantly upgrade to the next asset class in order to grow your asset net worth. Last but not least, try to have an 18-month, if not a 20% buffer to tide through difficult times. And as promised earlier on, I'll be showing you some indicators that were used on top of what is being shown over here to give you a clearer understanding of what would the coming months be like. I will share with you what you need to do if you think there's a cooling measure or even if you think there's no cooling measure. First and foremost, we have to know the indicators. Number 1 is earlier we were saying that how the government determine whether the price is too expensive is by looking at the GDP growth. And when I went to search Singapore real GDP news in the third quarter of 2024, Singapore economy expanded by 5.4% on a year-on-year basis, faster than a 3% growth in the second quarter. Quarter-on-quarter, seasonally adjusted basis, the economy grew by 3.2%, accelerating from the 0.5% expansion in the previous quarter. And what do they forecast that the GDP will be about 1 to 3%, very broad basis, but I think this is just telling us that the GDP has grown in the last few quarters and in fact will be growing in the next few quarters as well. And last but not least will be the S&P 500. And if you have not been watching the stock market recently because you're still waiting for price to drop, I think this is a reflection of the market. And in fact, I have this dilemma when I'm buying stocks and shares. There's so many products that I love that I buy in once already, and I told myself I'll be disciplined and keep buying in dollar cost average, but I didn't because I see the price constantly going up, and some of which I would think that I'm already priced out but definitely 80% of my assets are actually in property. And I don't know why I'm saying this because maybe I also feel very painful, but the point that I'm trying to make over here is that when the stock market actually goes up, there's a natural tendency for Asians like ourselves to actually encash our investment from the stock market to buy into hard assets which are more stable, and that's why real estate is always a lagging indicator indicator behind the stock market. When the stock market goes up, usually within 2 to 3 quarters, you see the property prices go up as well. And you can see a sustained push up in terms of the stock market ever since the start of year 2023. Having said all this, do you think when the interest rates are lower, stock market is growing, and also the GDP is growing, will there be higher demand for properties? So using this data, what should you be doing as a seller? I would think that as a seller, first and foremost, is to go and refinance your loan first, because there are packages that offers you waiver of penalty due to sale. That means if you sell your property, they will not charge you the 1.5% penalty on the remaining outstanding loan. And which loan package should you be going for? Just go for the fixed rate, because with the floating rate currently at 3.5%, I don't see within a short period of time the interest will drop to below 2.5, which is what you can get for some fixed rate packages. So in a nutshell, refinance first, make sure that you actually have a waiver of penalty due to sale, and go for the fixed rates. And on top of that, if you're hoping that your resale property is able to sell above record prices right now, refer to my previous video which I talked about the recent news. Condo resale property prices actually went down, especially the RCR agent. Go check it out if you wish to. But I'm not saying that the price will go down. I'm just saying that more or less currently we are hitting the tipping point of the property market already. Think a plateau period. If you are somebody that's selling to buy a bigger house, I will not advise that you do if you continue to hope that you will achieve the next record price. I'd rather you sell at the current market price and look for the next upgrade, which you may be able to find some value buys, especially during the festive periods when the market is a bit slower. And also, as usual, if you are selling not to do anything, I wouldn't think that's a wise choice. Just keep yourself hedged against the property market, because over time the new highs are still higher than the last high and the new lows are still higher. So no rush to sell, because cash is trash. Better to keep yourself hedged against the property market. On top of that, as a seller, if there were to really be cooling measures like suggested by this Barclays comment, it wouldn't really help, because if you study the past, whenever there's a cooling measure, there will always be a knee-jerk reaction, meaning to say to achieve the next cycle pricing will take you at least a 1-year period. So if there's a cooling measure, it wouldn't really help you to get a better price. In fact, it will take you another 1 to 2 years to achieve the record price that you were hoping to get. As a buyer, very straightforward. Whenever there's any cooling measure, it basically beats you up in terms of affordability, either by increasing the down payment or reducing the loan amount that you are able to qualify for. But yes, I know some of you may be thinking like, hey, currently there's no new launches, I'm waiting for the next year launches to happen. In fact, during the launch of the previous launches, I was already very concerned that the government may suddenly come with a hard stop in terms of a cooling measure, especially after Woodlands has started to trade above $2,200 per square foot thanks to Norwood Grand, and also Trump Park in the OCR trading 2006. It just gives a lot of people a lot of worry on whether there will be another new cooling measure. And as a buyer, trust me, you won't want that to happen. And even if it doesn't happen, with indicators on interest rate, stock market, as well as the growing GDP, I would think that next year the market will be more crowded. If you are still in Singapore, and if you are still able to see properties, there are still good new launches out there. In fact, you don't really need to wait until next year, because there are current stock in the market that you can buy, which is of similar pricing and similar attributes, and you do not need to be subject to luck. And looking at getting your keys as soon as possible, there are also subsale properties that you can look at which have not achieved the TOP surge in terms of pricing. As you know, when you're buying a property, there's always a new launch phase, post-launch phase, TOP phase, and the resale phase, which usually in the resale phase you see stagnancy. And if you're able to buy right before the TOP, you should be able to enjoy a little bit of capital growth before the property enters into the resale stagnancy phase. So if you have any more questions, do give me a call. Happy to share my thoughts on your plans. And like, comment, subscribe, turn on notification bell, because we post weekly real estate videos like these. Thanks for watching. See you at my next week's video. Bye.